Welcome to Global One Media Stocks to Watch. I'm Michael Swido. I'm speaking today with Eric Strand, a fund manager who really has his finger on the pulse of the commodity markets. Eric is a founder of AuAg Funds, which invests in precious metals, mining companies, and the green energy transition. Eric, welcome to Stocks to Watch.
Yes, really nice to be here, Michael. Thank you.
So you're based in Sweden. Did you see the recent solar flares?
I didn't see them, but I mean, they were almost all over the world. So that was a big one. And I really like the take that it's called Aurora and coming Aurum and AU like gold. So there are some nice connections about that. Thank you.
Yeah,
Yes.
exactly. People go to Sweden to see that, see the Northern Lights, to see the Aurora Borealis. And as you said, it relates back to your company because your company is made up of two symbols from the periodic table, AU for gold and AG for silver. So well done on that. I like that. I want to begin today with a story that has been rocking the mining and investment community. It's the proposed takeover of one of the world's most storied miners, Anglo American, by its rival BHP. Anglo American has so far rebuffed BHP's multi-billion-dollar offers, but in so doing, it's laid out a path to dramatically reshape its business. Anglo American CEO plans to sell off De Beers diamonds, as well as its coal mining and platinum projects. Now, Eric, your funds has invested in both Anglo American and BHP. So I'm curious, how do you think this is going to play out?
Well, I think there will come more bids and maybe more competition from other companies. So it's very interesting. It's a very special phenomenon we see here that big miners they don't want to go for exploration or new projects. They rather buy something that is already in production. And of course, it can be good for their business, but it doesn't give us any more metals for the industry. So it's a game changer, and I think that will make the prices for the commodities go up even more than they have been doing right now.
Oh, that's an interesting analysis, really, to hear that could have impact on commodity prices. I'm wondering what Anglo American's plans say about the market for diamonds, coal, and platinum. I don't think you have any diamond or coal holdings directly, but you do definitely invest in platinum.
Exactly, Matt. I think it's good for them to de-invest from the diamond side because it has nothing to do with metals. So I think it's good for them. They have to do something new, something better to get things going, or otherwise there will be a takeover. And maybe they will be even more interesting when they have cleaned up from some of the businesses as a takeover. So things will happen here, and I think it's just the beginning.
Excellent. We'll keep an eye on that. Let's talk gold now. The precious metal is currently trading a bit shy of $2,400 an ounce. It's up 30% over the past 7 months or so, since hitting a 52-week low last October. You've set an end-year target for gold of around $2,475 to $2,500, not much higher than where we are now. So I got two questions for you. First off, do you expect to raise your target price for gold anytime soon?
Yeah, I mean, we made the target before the year started, and we thought about 20% returns, and that would give us the 2475 target. And now we're almost already there. So, I mean, yes, we should probably raise the targets. And even JP Morgan, they came out with a late number here in March at 2,500. So I think gold below 3,000 is very cheap in any regard. So I think we'll go a lot higher from here.
Yeah, I've heard you say that gold would still be cheap at $3,000 or even $4,000. Why is that? Walk us through that argument.
Well, we have made a very simple calculation on what is the fair price for gold, and that's like when it's priced in dollars. So if you take the U.S. debt and the Fed's balance sheet, take some zeros away, and then you get the price of gold where it should be. And if you do this graph, it's only one time where gold was like expensive, and that was 2011 at the top. That was a time when gold was expensive, but to be expensive again, it has to reach today, yes, up to $4,000. So there's a lot of room on the upside.
So is it fair to say that you're definitely in gold for the long haul?
Yes, and of course, one day it would be too expensive, but I mean, we are always invested in the market. So we leave it to the investors to invest in the funds or leave the funds when they think it's overbought or something. But I mean, money printing, stimulus economics from the politicians, I mean, that's the name of the game for a long time.
In addition to gold, it's been a great year for other commodities. Silver is trading at its highest level in more than a decade. Copper has hit a record high. Critical minerals are also in strong demand, particularly as the US and China compete over resources. But the mining and exploration companies are not rising in tandem with commodity prices. Why do you think that is?
But first of all, I would say that it's like a second chance for people who missed the run in the commodity prices itself. And the miners have been lagging. But of course, as you've seen since the beginning of March, we have had tremendous returns in the mining companies. So it has already started to catch up. There's still a lot of room for the miners to go much higher from here. So it's a second chance for people who missed the commodity bull market or the beginning of it. I mean, it's a long bull market, I guess. And of course, there is always a reason. I mean, the cost for mining went up with inflation, so the margins became lower. But on the other hand, with higher costs, the margin expansion now will be more dramatic with these high gold and silver prices.
Yeah, I love the way you say it's a second chance for investors to get in on the commodity wave. You argued, like you said, that mining companies will catch up. They already are. And you say you're looking for triple-digit gains this year. That's huge. How confident are you that's going to happen?
I mean, if you look at it in a historical way, in a long secular bull market for precious metals, I mean, the miners do 700%, 800%. And during these years, you will see years where you have triple digit gains, not all years, but in some years you will have it. And well, this year in the beginning, in February, we were like the worst fund of all funds. And now we are probably the best fund of all funds. So, I mean, it's a big turnaround here. And I think it can end up really, really good for us.
That's a great transition to make. You definitely want to go from, bottom up to the top. Yeah. On this show, we interview a fair number of junior mining companies, and like the big miners, their share performance has been pretty lackluster of late. I'm wondering, do you think there will be a turnaround at the level of the junior mining companies as well?
Juniors for sure, explorers. I mean, they are a little bit in trouble now that the big ones, they rather buy productions, other companies that are already in production. Because of the mistakes, or they overbought too many things 2011, so they are very careful now for new products. So it will take some more time, but of course there will be huge returns when it starts, and for the ones who survive not getting money at the moment.
Okay, so the potential for huge returns, but of course there still is that risk factor there. Let's take a look at AuAg's funds now. There are four of them. One invests in silver mining companies, another in gold miners. There's a third fund on companies that mine essential metals like copper. And the fourth fund has a 60-40 split between green tech companies like Enphase Energy and Canadian Solar, and another 40% in physical metals. I'm curious, when you look at the companies that put into your funds, how do you determine which ones to include? How do you screen them and then decide on the right weighting?
Well, in a general way, we look, first of all, that we need companies that are very liquid on the stock exchange, so we can trade, so we can buy and sell. So be on a big exchange and have a liquid stock. That's very important for us. Then it's what metal are they mining? How much silver or how much copper or whatever it is. And then jurisdiction is very important today. It was important 4 years ago. It's even more important today. And then the management is very, very important. So there is a mix of bag, but we like to buy a company forever, and we keep the portfolio really tight. So maybe 25 companies or holdings. In one fund it's 20, one is 30, and one other is 25. So it's very narrow. And to add a new one, we have to take one away. So we have some candidates, but they really have to be better than one company that we already have. So we are long-term investors, not going in or out. So we have just made a good portfolio, very stable construction.
So kind of a Warren Buffett approach there, buy and hold.
It is.
So I'm curious, as an investor, you have four funds. How do I decide which one might be the right one for me?
Well, that's a hard one. It depends, of course, what risk you want. I mean, our Silver Bullet fund, AuAg Silver Bullet, is the most volatile fund, I think, in Europe for UCITS funds. And our Precious Green, the 60-40 portfolio, is much more stable. So if you want the stable returns, I mean, the Precious Green fund is better. If you want the returns, you really believe in it, go for it. The Silver Bullet fund is it. So it depends a lot on your risk and maybe what you believe in more. Do you believe more in silver, gold? But many of we have over 40,000 investors, and many of them have all the four funds. They just allocate a little bit more to the one or the other.
Can anyone invest in AuAg's funds? Are there any restrictions?
No, actually, I mean, we are UCITS funds, so we have no limits. You can have, I mean, invest as much as you want and also as little as you want. So it's very easy to invest.
Okay, good to know. So it's open to everyone. All right, I got a lightning round for you now. So quick answers, gold or silver, which will end up performing better this year?
Silver.
What is the biggest risk factor for investing in gold?
I think that would be if they stop the QE stimulus and so on, but they won't. So I can't see any real big risk here.
So what about for other commodities, the biggest risk factor?
I think maybe a little bit that we have a problem with the EVs selling. That could be some pressure on lithium, cobalt, and other battery metals.
If there's one critical mineral that you think needs to be part of every portfolio, what is it and what is it used for?
I must say two, silver and copper, because they are for the green transition, for electrification of the world. So they are the two metals that really are important for the electrification.
Okay, excellent. If we make a comparison now with equities, the Dow topped 40,000 for the first time this week. It's up 20% over the past year. But futures prices for metals like copper, tin, and silver, they're doing even better, up about 30% or more. Do you expect them to continue to outperform?
For sure. That's a definitive.
Okay. All right. Finally, if you could be doing anything right now outside of work and talking to me, of course, what would it be?
Oh, I just like to do a lot of practice, physical practice, and walking around and get some good air.
Okay, fresh air. And I think you do a lot of yoga too, if I heard right.
That's correct.
All right, fantastic. Thank you for being such a good sport. It's been a pleasure speaking with you. Hope we can have you back again on the show soon.
Yeah, it's really nice. Thanks.
We've been speaking with the founder of AuAg Funds, Eric Strand, and you've been watching Global One Media's Stocks to Watch. I'm Michael Suedo.